In today's video, we're going to be talking about the ultimate deep pullback price action trade. This is a trade that I utilize all of the time in my own personal trading because it can set you up with not only having an advantage in terms of winning percentage, but with a really nice reward to risk ratio. Let me quickly explain that on the charts before we keep going. First, we have our push up, right? Then we have a higher low and a higher high. Then the market pulls all the way back to our previous support level. I know you've seen this happen before. This is what is considered a deep pullback. So on this deep pullback, there's actually a few different entry reasons we can utilize that can give us an advantage over the market while also giving us an opportunity to get a really good reward to risk ratio because we have a safe place right at structure to put our stop loss. That's what we're diving deep into in today's video. So if that sounds good, make sure you go ahead and click that like button for me to help out with the YouTube algorithm. Make sure you are subscribed by clicking the button down below the video to the right hand side and click the notification bell so you're alerted about the future content we come out with. With that said, I'm gonna let the intro and disclaimer roll. I'll see you directly after. Welcome back, and there are two different ways we can utilize this deep pullback price action trade. The first one only utilizes one time frame, so it's kind of the easiest, and the second one's going to be utilizing two different time frames. And I actually had a live trade a little bit earlier this week utilizing this strategy. I'm going to play a clip from the dollar-yen trade we had earlier this week, and I'll be right back. What is up, traders? Just wanted to show you a live trade here. We're taking on the dollar-yen going short here after a pretty big move to the upside. And I'll tell you why in just a second. I'm gonna go ahead and place the order. We'll talk about the reasoning behind this trade right now. And then by the end of the video, I should be able to show you this trade either winning or losing, hopefully, because we are on a day trading time frame. So the trade is set up. Like I said, I'll keep you guys updated on how it plays out while we go through the video content, but let's get back to the video. All right, so here's about the area we placed that trade, and let's take a look at the results, and then we're gonna dive into the different entries you can use. One, again, on a single time frame, and the second one, more like the trade we're taking here, using multiple time frames. So the results of this trade, it ended up working out, but not after, or not before, putting us through a little bit of pain. As you can see here, we're just consolidating consistently. We actually got semi-close to our stop loss right here, not getting stopped out though, and then the market eventually pushed down and hit our targets right in that area. So we did end up getting a winning trade out of this. I just wanted to show you guys this to show you that I utilize this in my own personal trading all of the time. But now let's actually go up to a whiteboard and dive into the first version of this, the single time frame version of the deep pullback price action trade. All right, so here's the part where we're gonna be talking about entry reasons. Let's go ahead and dive onto the whiteboard and draw some of this out to make it easy to understand. So as we were talking about before the intro and disclaimer, what we're looking for is a market that's in trend, making higher highs here and higher lows than our previous lows. That tells us the market's in trend. Then we are waiting for this market to pull back and have what we call a deep pullback. A deep pullback is classified as a pullback that touches our previous level of support. Now here's where we're going to talk about entry reasons on a single time frame. Like we're trading here, let's say the trading time frame and the time frame for our analysis and previous structure level is all currently on the 4-hour chart. What we would be looking for on this 4-hour chart is what I call, for a bullish example, is what I call a close above candle. So for a close above candle, that literally is just what it sounds like. It's a candle that looks something like this, let's say, and here's the wicks. It is a candle that then closes above the high of the previous candle. It's that simple. That's all we're gonna be looking for in terms of our entry. So our entry on a single time frame is simply, for a bullish trade, a candle that closes above the high of the previous candle. All this other stuff needs to line up as well though. We need to be in an uptrend and we need to be back at our deep pullback level or our previous level of structure support. We're gonna do this on a chart as well. And just so you know, the complete opposite is true for a bearish version. We're gonna do that on the chart, so I'm not gonna do it here on the whiteboard, but a bearish entry is a close below candle or a candle that closes below the previous low of the previous candle. With that said, let's dive down into some charts and check out what this looks like on actual candlesticks. So here on the Euro Pound, we have a really good example of this trade. What we have is the market starting an uptrend, pushing up from low to high. I'll actually draw this out with a trend line tool to make it easier for you guys. Low to high, higher low, higher high. At this point, do we have what we're looking for? Well, not until we get a pullback to our previous level of structure support, right? So we get a higher low again and another higher high. Now, what would we be looking for? Now we're looking for this market to head down to its previous level of structure support before the break and close of this high. And guys, if pointing out swing lows and highs and understanding trend is something you're struggling with, I'm going to put a video in the top right hand corner of the screen and in the description that I did last week that talks all about identifying trend and identifying swing levels. That way I don't have to go through it again here in this video. But in this specific case, what we're looking for is the market to come back into the previous level of structure support. When it gets there, what are we going to do? We're just looking for that close above candle. So here we go, pushing down. We're in our level of previous support. We've now accomplished condition number 2. We need a deep pullback. We have that deep pullback. Now, what do we have? We have the deep pullback and we have a close above candle. Does this candle close above its previous candle high? Yes, it does. With that being the case, we have our entry rule met. And if we were writing this out in what I call CEST, which just stands for conditions, entries, stops, and targets, then we would say our conditions are market in trend, creating new higher highs and higher lows. That's our condition number 1. Condition number 2, we need a deep pullback. A deep pullback is defined as a pullback that touches our previous level of structure support. Our entry, so CE, our entry is our close above candle. If you didn't know by now, if you've been watching me for a while, you do. We need objective rules for a strategy to be consistent. We need consistent rules to stay consistent. Who would have thought, right? And the consistent rules that we create, we do so with this CEST. So now that we have our C and our E, conditions and entries, what's our stop look like? Well, we want a stop that is safely below our previous structure support level. The reason for that, and the reason this is such a neat trade, is because we can have our stops safely below the support level since the market's already at that support level. The reason we want them below that level is because if this market starts trading down here and breaking below this low, that is telling us that the likelihood is a continuation to the downside, not a continuation higher in our trend. So now that we have our stop set, remember the stop is just going to be below our previous swing low, we can set our targets. For me, I do about a 1.5 to 1 risk reward, a set stop, or a set target, excuse me. Feel free to use structure. You could use the previous level of resistance. You could zoom out and use the level of resistance that was next up, which would be somewhere about right here, looking left. There are plenty of ways to take stops and targets. I'm just giving you a simple version of this, but what I like to do is see if the market heads up to my previous resistance level. If it does, I move my stop to break even, and then I manage the position as this market moves higher. But again, use a 1.4, 1.5 during your testing. Not saying to go trade this during your testing. Let's see what happens here with this market. Pushes up, hits targets quite easily. Let's continue. What are we looking for right now? What just happened? The market has a higher low or an equal low, doesn't matter, as long as we're staying in trend and we don't close below our previous low. Then we create a new higher high. Now what would we be looking for? We'd be looking for the market to come retest this previous level of structure support and then push into new highs. We're still expecting trend continuation to the upside. And if I click play, you'll see that that's actually what we're waiting on right now on the euro pound. So right now, I'm waiting to see if I can get a close above candle, okay? After the touch of our previous support level, that's all I'm looking for in terms of qualifying this as a valid entry. Let's take a look at one bearish example of this one time frame way of trading this specific strategy, and then we'll take a look at the more complicated version that utilizes 2 different time frames. So first off, what type of trend is the euro pound in right now? Well, we can see that we have a push down to a swing low, a new lower high, a push down to a new lower low, a push up to a new lower high. And what is this? This is a break and close to a new lower low. I can put a horizontal line there. You can see that we have a close below our previous low. After the close below our previous low, what we're looking for on a bearish example is this market to retest the previous lower high, which is right here, and give us a close below candle instead of a close above. Let's see what happens. Market pushes higher and gets into our previous level of resistance. Right now, what do we have? We have both of our conditions met. The C out of the CEST is already met. We are in a downtrend making lower lows and lower highs. We're also now back up to previous structure resistance, the previous lower high. And so now what we're waiting on is that close below candle to give us an actual entry reason. Do we get it? Will we get it? Still no close below candle yet. And there we go. Finally, at this level, we now have a candle that closes below the low of the previous candle. If you look back here, we don't have that at all until right here. So that would be our entry candle. We'd be going short on that candle. Where does our stop loss go? We said it before, above the high of the previous resistance safely, because if this market starts trading up here, we're expecting us to head higher. We're expecting the market to keep going higher, not to continue this downtrend. So as long as we get our stops safely above that level, that's totally fine. Your options for targets are wide and vast and completely up to you. You don't need to be going and trading this right now anyway. Go test it, figure out stops and targets for yourself. But here, we would have about a 2-to-1 reward to risk if we put our targets back down at the previous lower low of structure. So if I hit play, we'll see what happens here. In this case, guess what, guys? We get stopped out. Yeah, I threw that in there because there's a lot of times this will happen too, right? We barely get stopped out, by the way. Look at this. The market then continues lower. So a lot of the time, you'll see people that just show you wins here on YouTube, and I don't want you to think that trading is about winning every single trade. That will never happen. That's why I wanted to throw this loss in here. For me, the way that I've tested and traded this strategy, it does provide an edge over the market, but it's important that you do your own testing and your own adapting this strategy to your own personality. So with that said, and now you know what a bearish example of the trade looks like, even though it lost, let's now dive into the second version of this strategy that utilizes multiple time frames. And we'll actually go over to the dollar-yen trade so you can see that firsthand. That's the trade we had that you saw earlier today, the live trade on the dollar-yen. Let's back up. Right here was our conditions. So for this, we're going to be looking at conditions and entries a little bit differently. So let's go ahead and do this. For our conditions, we're looking for those on a 1-hour chart. And by the way, guys, so I don't get that many questions in the comment section, feel free to ask questions. That's totally fine. But almost everything I teach can be utilized on any time frame. Price is price. It doesn't matter what time frame it's on. So for this example, I'm going from a 1 hour looking for my resistance level to a 15-minute to take my trade. You could go from a 4 hour to a 1 hour. You could go from a daily to a 4 hour. It does not matter. It's totally up to you. You need to be testing it anyway. But in this case, let's get back on track. What do we have? We have a downtrend. The market pushing down, lower high, lower low, lower high, lower low, lower high. At this point that we see that break, condition number 1 is met. We are currently in a downtrend. We have our condition. What are we waiting for our next condition? The market to create a deep pullback that tests the previous lower high. Do we have that? Yes. So condition number 2 is met. At that point, what are we looking for? Well, in the case of the 1 time frame example, we would already be entered in the trade. We're looking for a close below candle. But this is how I like to utilize multiple time frames using this, and it provides a little bit more accuracy for me and the way that I trade. I have my area, and then at this point is when I would drop down to a smaller time frame. And you guessed it, if you've ever seen any of my videos before, you know how much I like simple price patterns. So what I would be looking for on this lower time frame is simply a double top. And here it is so easy to see that we have price pushing up. We have one top right here. We have our neckline. We have our second top. After that second top, the only thing I need to see is selling pressure. Once we get that second top, I saw that we had some selling pressure right here with this big red candle. That's all I need to enter the trade. At that point, this is how I utilize multiple time frames to place this type of deep pullback trade. And I absolutely love this type of trading, again, because you have this safe place looking left to put your stop loss above, because if the market gets all the way up here to 104,197, we're breaking above this high. I'm expecting the market to continue higher. But as long as we don't get up here and break through and hit my stop loss, I'm still really expecting this to be a continuation of the overall higher time frame downtrend, as we can see right here on the charts. So that is the way I would utilize it, using multiple time frames. But guys, there is no way that just having this strategy will be enough. Let me put it this way. There are probably 10 strategies that I've created on YouTube that have proven to give me an edge over time. What a problem that most beginners have is way too high of expectations, for one. These strategies I've tested strategies for a decade. The strategies I've found, for the most part, win between 50 and 60% of the time. And if I'm lucky, I get between a 1.4 and a 1.7 to 1 RR, reward to risk ratio, out of those. That's not what beginners are looking for. A lot of time beginners are looking for this strategy that'll make them millions of dollars by next month. And because of that, your expectations are so high. When you find a strategy that does this and provides an edge over the market, you just keep switching strategies, trying to find that 90% strategy that gives you a 4-to-1 reward to risk ratio that does not exist. So what I want to show you now is the actual path to profitable trading, because learning a strategy from YouTube in a 20-minute video is not going to get you where you need to be in order to be a professional trader. But let me talk to you about what does get you where you need to be. It all starts with what I call the triangle of trading success. You want to make money as a trader, you need to master this triangle. And yes, a strategy, system, type of trading like the deep pullback price action trade that gives an advantage over the market is extremely important. One of the most important parts of trading. There are 3 main important parts. So a strategy is definitely one of those things. Guess what? A strategy that provides an edge over the market is a strategy that wins 50% of the time and gives a 1.5 to 1 reward to risk. That's an edge over the market. Now what happens? Well, what happens is traders see this. They learn this strategy on YouTube, but then they never go back through historic data and back test it for themselves. So therefore, they don't have confidence in the strategy. It loses 5 in a row, 4 in a row. By the way, the strategies that have 50% win rates lose 4 to 5 in a row very often. That's a very normal part of trading. And the way you reconcile those losses and keep those losses from making you super emotional and keep those losses from blowing your account is by having a good risk management plan. You must have a good risk management plan so that when those losses come, it doesn't blow your account initially. Duh, you can't win trades if you have no money to trade with. But also, it doesn't make you so emotional that you want to switch strategies, and so emotional that you completely stop trading altogether and join the 90% that tried but just didn't quite make it. That's not what I want you to be. That's why I explain this triangle of trading success in like half the videos I do, because it's so important for you not only to master a strategy that gives you an edge over the market, but also to have a solid risk management plan that keeps you out of your emotions, and to have the confidence and, thirdly, discipline to stick to that strategy and to stick to the risk management plan. I get questions all the time. Steven, how do you stay so patient? Traders have FOMO. They have fear of missing out. So they get into trades without following their strategy or trading plan. I get questions like, Steven, how do you stay so disciplined to your trading plan? All of that comes down to back testing and risk management. The reason I'm disciplined to a strategy like this, the deep pullback price action trade, the reason I'm disciplined to this and patient until I find it is because I have back tested thousands of situations where this exact situation happens. You heard me talk earlier about objective rules. Every rule lines up, CEST. Every condition lines up correctly. Every entry is exactly as I said. Why am I writing in the air? I do that all the time. If I don't have a pen or a mouse, I write fucking up here. But you saw me do the conditions. Those are the conditions I wait for. The entry, that's the exact entry I wait for. If those don't line up and I'm trading the pullback strategy that I just taught you, I don't trade at all. I'm patient. Watch this. Sit right on my hands. I could care less what the market does outside of this. And so the first step to you becoming a profitable trader is to pick one. Pick a strategy. Then go dive deep into testing that strategy. And then after testing that strategy, dive deep into creating a risk management plan that you are comfortable with. If you backtest 1,000 trades using this and see that it was profitable over that entire time, using multiple pairs, I normally go 100 trades when backtesting, 100 trades per pair and per time frame. So if you do that on the dollar yen and you see out of 100 instances, it provided a 50% chance to win with a 1.5 to 1 risk reward ratio, that is going to give you the confidence to stay disciplined to that trading strategy, to be patient, to keep from having FOMO and trading randomly, to keep from just moving your stop loss down or up, to keep from moving your target because you're scared. If you go through that process of backtesting, it builds the confidence you need, especially if you combine that with having a good risk management plan. As a triangle, this should really be a circle because it all goes into a circle. You need a strategy that gives you an edge of the market. You need a risk management plan that keeps you from getting hyper emotional. You need to backtest that strategy so you can stay disciplined to both of those things. That is the true path to becoming a professional trader. And anybody that tells you that you can get a Lamborghini next weekend is just trying to sell you some course. Or trying to sell you on becoming a part of their brokerage that they are affiliated with or some shit like that. This is the path. And it takes fucking work. This is what most gurus and trading coaches won't tell you. It takes a shitload of work. It will take you hours to backtest this strategy. But guess what? I did some of the work for you. I told you the rules. I gave you the CEST, conditions, entries, stops, and targets. So from here, it's in your hands to decide if you're going to take this, put in the work, and actually do what's necessary to become a professional trader. I hope you say yes to that. If that is the case, then I want you to comment below and say I am in. And then go put in this work and tell me what you come up with from your backtesting results. If you decide to demo trade this and then go live with it, let me know in the comment section below. I'm going to go ahead and end the video here. Click that like button if you enjoyed it. Make sure you're subscribed so you don't miss out on any of the future content we come out with. If you want to know the exact strategies and rules that I use in my trading each and every day, yes, I do sell a course because I can't put everything into a 20-minute YouTube video, and the course is actually structured. So you go from exactly where you are, whether you're a beginner or intermediate or wherever you are, you go from that to going through this whole process. We go through it together so that you come out the other side a better trader and you have a systematic approach to doing so instead of random videos on YouTube. So if that's something you're interested in, then the VIP content that we have is labeled EAP Training Program in the description. Feel free to join us there. Feel free to check out some of the other free material we have listed in the description. And I am going to let you guys go on that note. Talk to you soon. See you in the next video.